everybody. This is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading. So you might be interested in that. All right, it is time to analyze the crap out of this latest move. I'm glad you guys are all here. Lot to talk about, a lot to unpack. Let's just say, wow, this last 24 hours was pretty unexpected. I thought, pretty decent chance that we reject off of the 100. I did not know we were going to be closing right on our heaviest resistance. I knew 18,800 was extremely heavy resistance. That was the bottom of our trading range since June. So from June all the way until the FTX drop, we were defining this trading range between here and here. And what makes this 18,800 even stronger is that the weekly resistance is right there too. So this is not a close on a weekly candle. This is 3 days young. So we have some work to do. If we closed on this line on a weekly scale, it would be the first chance that we have to attempt breaking it, because this is such an important line that we're not just going to sneak past it. We either have to blow through it with a massive candle, or we have to stop on it and attempt a new candle to start a fresh attempt. We're 3 days early. My expectation is that I don't know if we're going to last. I mean, this has been a pretty massive unidirectional move. And on our daily, our RSI is extremely high. If I pull in our RSI, we closed at 80.88. Above 70 is overbought. Below 30 is oversold. So you're kind of pretty toppy. In fact, yesterday we were above 70. And yeah, 72.61. So we've been kind of pushing it a little bit. If we just keep doing this, we're going to end up with a giant spike up and a spike down, and that's not going to help us in the long run. So I'd really like to see a rest here, but we have 3 days. And to kind of drive the point home, see these lines here? You think that you just draw arbitrary lines and that they don't mean anything to anybody. But let me show you on the 1 hour chart these same lines. Notice how, because intraday you don't notice these things, but we came up and stopped exactly on the 100. This was our daily close right here. And then we started a new day. We did not move higher until on the hourly we came back and found it as support. This was perfect support. Let me zoom in on this. Our 100 is at 17,918. Our low on this candle is 17,924. This is a $6 difference. So we have a multi-$1,000 asset, $18,000 asset that's trading, and we touch within $5-6. There's a madness to this method, right? So we came up, we found a resistance point, and then we found perfect support on an important line just to pay our respects to it. And then in the next few hours, we blasted through, and here's our line. These are our 2 lines. This is exactly the lines that I'm saying are so important. We ticked above it, and then what do? We had a nice spike, had a drop, but we closed this right on the line. So this is still in play. This is months later. Like we drew these lines on there so long ago. But here we are intraday, making moves on these levels. And so then we lifted off and we had our highest hourly close, and we were right there, right near our other resistance. Yeah, our other resistance. This was, just what this is. This was that kind of interesting level of support that we found after we had what I thought was our Wyckoff spring. And we leveled off right here. So this is a very well-defined level of support, now flipped to resistance. 1, 2, 3, 4, 5 candle bodies on it, and plenty of wicks for support. So this is a well-established area. So between these two, we have a 8-month-old, what is this, June? 7-month-old line that we drew on here as our trading range. And now we're just trading all over on this, showing a lot of respect to this. Our wicks are finding support here. Our bodies are finding support and resistance in this range. We're trading in this range. Are we too high? I think so. I think we're too high. We have to come back and find some support. Markets just don't go one way forever. They just don't. And I kind of wanted to do a quick check in the history. I know that we got a couple of little red dojis to kind of break things up, but they're so tiny. This is essentially a 4, 5, 6, 7, 8, 9, 10, 11, 12-day streak where we have just absolutely moved in a certain direction. And not only that, but we have this day at 0.32%. We have this day at 1.5%. We have this day at almost 3%. So we've doubled our increase percentage-wise, so not candle body-wise. 1.5 to 3, and now we just closed a 5%er. So we are almost doubling our percent gains on a daily basis. At this rate, what would that be? A 10% day tomorrow? I don't think this is even possible. This is why I want to put the brakes on our expectations here. This would be so unhealthy. 10% would sit us like right at 20,700. Yeah, we just can't go up too far too fast, or we're gonna have a massive pump and massive dump. I'd love for us to chill out a little bit. We're high enough though that if we actually could last here for a few days, and I just don't think we can. I think we're gonna come back somewhere. But oh man, if we found the top of the 100 as support, especially because the 100 is still decreasing a little bit every day. It's going down by, looks like about $40. So, and it's at, oh, excuse me, I was looking at the wrong number. It's going down by $13, about, yeah, $15 a day. And we're currently trading at 17,887, and our top here was 17,800. In 4 days, our 100 will be at the exact level of our resistance that we just exploded through. So, if by some miracle we pulled it back in 4 days and landed on the top of the 100 and landed on top of this support, it would be one of those moments where you're like, I know this is irresponsible, but I'm putting a house in this thing. The structure will be impeccable. It'll be so pretty. Don't do that, by the way. That is not a good idea. But, oh my goodness, the opportunity that's sitting right here. This is a huge resistance. This line and this line are both a very, very powerful resistance. So I knew for sure we would struggle in this area. If we have any kind of a green day, it will evaporate. We will come right back down to this because the weekly candle has massive resistance here and our weekly candle isn't closed. So if we attempted it and fell back, that would be kind of weak, but you know, honestly, we'll take what we can get because I didn't expect us to be this high. So anyway, this is going to be a rough one, but if we come back, do something healthy like find support on the 100, worst case scenario, we will likely find support on the 50. The 50 will be unbelievable support at this point because we had so many, it was so important right here, and it was so important right here, and it was very important right here, and then we got above it, respected it for a couple of days as support, and then moved. This will become support, most likely. There's a very high % chance that when we do come back down, and this is coming up, by the way, when these converge again, it should be pretty significant support. So we will likely come back down, probably in 4 or 5 days. We'll probably land on the top of the 100 and hit a handoff between resistance and then support. And by then our 50 will be up a little higher or whatever. So I don't know if maybe our wicks will tag it or something, but we will most likely, that would be the best case scenario. If we did that, it would be unreal. This is when we're going to open the bank account and start putting in a decent position. Because then if we reattempt this, then we're in good shape. But this is a couple weeks of process. I don't expect us to be above 20 tomorrow and just we never look back. That's just not a reality. I'm betting we range between 18,000 and 19,000 for a couple of weeks, best case scenario. Worst case scenario, we could probably come back to 17,500. That's kind of what I'm looking at if we end up coming all the way back to the 50. In fact, if we went up very much more, it would start getting really ugly because then we'd have a huge spike and it would take us a month to overcome the emotionality of that. So I'm loving what I see. I know that we're oversold, overbought though, so we are definitely stretching our necks out quite a bit. But the threats of a new low are in the rearview mirror right now, and that is pretty awesome. So I haven't shown my pattern matcher for a little while. There were some things that were helpful and some that weren't. And now that we have today's close that just literally happened 19 minutes ago, I want to show it to you even though the variances are horrible. There are actually some rhyming patterns that do make sense. So first of all, this is our closest match, and you can see that it's way above 20. So it's almost like why even bother with looking at some of these. But this pattern isn't really that close of a match. I mean, you can see a little bit of a high. You can see our low. So we kind of had our high and our low. And then we've got a move up, and it thinks we can keep going. So that one's not the best match. This one's not necessarily the best match either, although this day does reflect kind of from a percent standpoint, it sure does put the rest of these positions into perspective. But this high is certainly not existent in this thing. But here's what I do want to show you. So remember how for the longest time we just kept coming back to the 2015 time frame. Look how close this looks. This looks very, very possible. We have a little pullback here. We had kind of a move to a higher range up in here. We dropped down and then leveled off at a slightly higher range. All this is making sense. This drop was a little bit more severe than what we experienced here because here we kind of held our ground. And here we dropped below this point. But then we had this kind of slow burn and finally a candle that kind of dwarfs all of the other highs, which is exactly what happened. So even though the variance isn't great, which means percentage-wise the moves don't match, but candle-wise and structure-wise it matches really well. So this is really kind of a nice thing to look at. I would love it if this was the outcome. If after a giant move up here, we had a couple of days where we kind of went sideways, slowly bled a little bit, kind of went a little sideways, found one more support, and this support is probably the prior highs resistance. It probably hits right in here, and then we turn around and reattempt, and then we're off to higher highs. I don't know how all this plays, but I can certainly see this outcome happening. So this 2015, the bottom of the 2014-15 bear market is exactly, I just really feels very similar. So we were looking more in September rather than June. So this pattern looks really nice. But the June one is the one that kind of has this wild blow off top. And percentage-wise, we have definitely moved pretty high. This close, you can see it's obviously higher than everything else. Here's a dip. Here's an attempt. Here's finding a higher base than this low. So there's a lot of similarities here. And we followed this move for move through September and now October. Like, it's unbelievable that this is back on the table, because we have followed this so closely for months, watching to see if this would play out. And here we are. Now there was a pretty ugly correction candle, and then we found some support, and then we just kind of moved on our way. And we had quite a blow up here. This is all coming to pass. Like, this is unbelievable. It's like the Lego movie, The Prophecy, you know. It's not a prophecy. The guy made it up. But pretty cool. It is very cool to see these patterns coming back over and over again. And it just feels like there's a rhyme and a reason for all of this. We do need some cooling off, though. If we're going up 1.5%, then 3%, then 5%, you know, if we have an 8% day or something, I'm seriously going to be tempted to put in like a temporary short, because the gains on the table are looking pretty delicious, and it might be nice to lock some of that in. But yeah, I'd rather be patient. I'd rather watch our market kind of cool off a little bit. And if we found support on the top of the 100, it would be phenomenal. We've already flipped from resistance to support just by this candle. So we have a chance of holding this, which is really cool. The 50 should be strong support as long as we don't get too high. If we go straight up and come straight down, there could be so much downward momentum that it'll kind of break things up. So I would love to see some quiet days. If we could just have some quiet days and stay in here in this range, it would be phenomenal. But we are not out of the woods. We have 3 days until the weekly candle closes. And if by some miracle we're in this vicinity, it will be a significant chance for us to move to higher ranges. So anyway, these are my thoughts. It is fun to be right. You know what I mean? We have done this piece by piece. We talked yesterday about how there's no resistance between this level and this level, and that it is very probable that we'll slide right up and get there. I thought we'd close at this close, but we ended up tagging the 100. It was better than my expectations. It's so awesome. But the same rule applies. There's no resistance. We went so fast that there was nothing in the way between this point and our resistance. And what did we do today? We just slipped right up there. It was so awesome. So we just went right through. There were no levels to break because we had moved so quickly through this area, and so, you know, easy come, easy go. In this situation, it was easy go, easy come. So we're back. We're back up to the bottom of our trading range that we were originally battling with, and if we can get back up into that trading range, we can kiss this bear market goodbye. We can go into sideways consolidation mode, and we can trade the swings for a year or so. But yeah, when we start breaking above these major important things, people are going to pile on the bandwagon. People are like, the bear market isn't over until we hit 25,000. By the time we hit 25,000, we're going to run to like 30 to 35,000. It's going to be like, it'll be fast. And then we will kind of try to deal with being too high too fast, and it'll be really unpredictable again. But the herds are waiting on the sidelines, and they've already missed out on this move. we're just watching this closely. And you guys are getting a front row seat to this. It's cool that you're here. The people that have lost money or that are out of the market, they don't care. And so you guys that are still here, you're the ones that are going to benefit from the best opportunities in crypto. And hopefully I'm here to help kind of walk through this thing and get it there. But yeah, it's fun to be right, guys, and it's fun to make money. So you might want to consider joining us on the Pro channel. It's been a pretty fun couple of weeks here. All right, I'll leave you there. I hope you guys enjoy your Martin Luther King holiday, and I will most likely get a video in tomorrow. My Fridays have been a little wacky, so we'll get 1 or 2 more videos before Sunday. All right, guys, have an awesome one. We'll catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.